Starting. All attendees are in listen-only mode.
Hello everyone and a very good evening to all. Today we have Mr. Siddharth Gupta, who is a product specialist with HDFC AMC. He is a qualified chartered accountant and a CFA. He specializes in macro and quant research. At HDFC AMC, he focuses on sector thematic products, debt products with longer horizon, and a bouquet of passive funds, while also authoring some of the regular publications from HDFC AMC. Siddharth has been a part of the products team since 2021 and comes to us from ICICI Securities, where he was a research analyst who focuses on market strategy and economics. So I request Mr. Siddharth Gupta to take over the webinar ahead.
Hello everyone, welcome to this call today. Thank you for joining in. So today we have come here to discuss the non-cyclical consumer fund. We are in the midst of a market which is now again back to its all-time highs, and in this kind of environment, I think this is a specialized offering which is very interesting. From a 30,000 feet point of view, this is a sector thematic equity focused fund which will invest, as the name suggests, in non-cyclical consumer companies. We'll understand what we mean by the non-cyclical consumer aspect, but it's fairly clear. It invests in consumer companies sectors that are relatively non-cyclical in nature, which are not which do not respond very heavily to economic shocks of both downside and positive side. So, why we believe this is a fund that one should consider investing in. It's based on three pillars. One, the fact that we believe that the consumption story, India's consumption demand, is at an inflection point, and we are going to see the Indian consumption change significantly over the coming decades in terms of what we consume and how we consume. And key factors why we believe consumption story is here and will continue to deliver good growth over the next few decades is on your screen. Because our income, our per capita income itself will shoot from the current about $2,200 to about $5,000 in a span of a few years. By 2031, it is expected by analysts that India will hit the $5,000 mark. So and I will go into all of them in detail, but the idea is that when you move from $2,000 household income to $5,000 income, you move from being able to just afford your basic necessities to having some additional money to spend, which we call as disposable income. So when disposable income goes from being very low or almost negligent to something, the delta is very meaningful, and a large portion could flow into the Indian listed consumption companies. Secondly, Indian consumption will also see a lot of premiumization. We have seen that in the past 15, 20, 30 years, but that could happen at an accelerated pace. Obviously, our demographics also support the growth of Indian consumption. Today, we are the largest country by population and also one of the youngest. So that is also a key support. As industries, as businesses formalize, that's a huge positive for listed companies because they have better economies of scale, and the sort of regulatory arbitrage with unorganized players goes away. Even digitization is a positive, and that's changing the way and the what of Indian consumers consume. Coming back to sort of the why one should consider the non-cyclical consumer fund. The consumption story is likely to evolve well over the next few decades based on what we've seen so far. second pillar of that story is the fact that these companies, right, not consumer companies as a whole, they tend to deliver, have better return profiles in terms of ROEs, in terms of earnings growth, and they have lower. And the third one is that the non-cyclical consumer universe, which I will sort of again explain, has tended to have relatively lower volatility in their earnings and business fundamentals. So these are the three key pillars. We will understand these in better detail. In terms of consumption's share of GDP, right? That's about 59-60% in India. US has it at about 70% broadly. But the interesting thing to note is that in the past, Indian consumption has grown at a faster rate than Indian GDP across FY13 to 18 and in the last 5 years. The table on the right also shows how fast the growth has been across consumption categories in India. But the rightmost column shows how much Indian per capita consumption spends can potentially increase as we move towards a developed nation trajectory. That's as the Prime Minister calls it, as we move towards Amrit Kal. This is a very interesting chart and story in my view, that how India's consumption could move very significantly, and that's primarily based on our per capita income. We are currently at about $2,200 per capita income. Analysts expect that to move to more than $5,000 in the coming few years. Now, when China saw a similar rise from about $2,000 to $5,000, they saw a very significant rise in across consumption categories. You can see how post 2006, when they were below $2,000, they were still growing at a fast pace, which Indian consumer space also has been growing. But that from post that hitting that $2,000 mark, Chinese consumption categories grew at a very strong pace, more than 20% across category space. So we believe, and we've seen this across countries. It's not just China. We've seen Indonesia. We've seen a couple of more countries. Wherever this $2,000 mark has been hit, in more often than not, consumption categories have grown at a very rapid pace. In terms of demographic dividend, right? We are the largest country in the world by population. We are one of the youngest populations in the world. And apart from this young age, we are also seeing trends like improving education, improving literacy, higher urbanization ratio. When countries when populations urbanize, so excuse me, a very interesting fact that I saw in one of the FMCG company presentations is how urban India has 3 times the per capita consumption of the rural India. So as India urbanizes, as we move from about the current 35% to say 40% in 2030, that could have a significant increase in economic activity and FMCG and private consumption. This is a very heartening chart in my view, the chart on the bottom. It's showing how the income pyramid in India is changing. Now, what this chart shows is how India, so this chart on the left, right, this one, this shows how India's households are stacked up in terms of incomes, annual incomes in real terms, 2021 prices. So today, around 38% of households, that's about 100 million households, have less than $5,000 income at the household level. Almost 74% have it less than $10,000, and only 26% have more than $10,000 household income. That's about 26% or 75 million households. As per analyst estimates, that could move to a very different profile. Only more than 53% of Indian households are expected to be earning more than $10,000 in household income. That's about 190 million households. So almost 115 million households will be added to the more than $10,000 uh, group, which is in our view the consuming class in India, or larger share of the consuming class. And as you would call this shape, but like a top, as we move towards a top heavy pyramid structure, I believe that could have very large implications for the Indian consumption. We believe that this could significantly drive premiumization. Uh, if and how does that help, right? That helps because Indian consumption companies have uh, products across the value chain. Premiumization, or the move towards better quality or higher priced items and newer categories of items, helps consumer companies have faster revenue growth. So they have products across the value chain, and as consumers move towards premium categories, and that's already happening, that could potentially lead to faster revenue growth. A very interesting graphic is something that we've put across here, that how the Indian consumer is moving from a very simplistic, limited product and services usage kind of a guy to a very very savvy and aspirational kind of a person who has multiple apparel options, multiple services. uh, Simply the grooming that you see in these two guys is very different. So the face of the Indian consumer is changing, and that's leading to premiumization. I will sort of quickly move through, but formalization is obviously a trend that we have seen already. For example, this chart shows how in 5 years between FY15 to 20, different categories of the consumption space saw very large increases in formalized market share. And I mean, in India, the unorganized segment is very large. There categories such as air coolers, kitchen applications, pumps. These have about 40% or more than that share of the unorganized sector. So the headroom for the organized sector to grow is very large. Uh, Digitization is something that we are, I think, all aware of. But once you look at the numbers, it becomes even more stark, and the growth numbers seem to be even higher in terms of the future growth that one could expect. So even as of 2020, about 600 to 690 million people in India were expected to have access to internet, but only 280 million were online services users, and the share of shoppers was even low. According to analysts, this number could grow at a very sharp pace, from about 660 to 690, so about 700 million people to about say 1,000 million people or a billion people. So in this kind of an environment where we believe that consumer as a sector, Indian consumption spends could grow at a fast pace, I would like to take on what we mean by this non-cyclical consumer theme, and that will sort of give you an idea of what sectors are also present. So broadly, they are divided into FMCG. That's the largest bit. Then there's consumer discretionary, and then there's others, which are sort of in a way consumer services, which are also not significantly discretionary, if I put it. But in terms of cyclicality, I think there is a distinction across sectors. For example, we believe that automobile components, realty, and power are relatively more cyclical, and in terms of macroeconomic shocks, both on the positive and negative side, these sectors tend to show higher responsiveness. So the rest of the sectors, such as FMCG, within consumer discretionary, you have durables, consumer services, QSRs, media and entertainment publications, and other sectors such as telecom and healthcare services. Those form part of the non-cyclical theme and will therefore definitely become part of the non-cyclical consumer theme. Now we'll quickly jump through our views on some of these sectors, and then we'll take on the fund and the way it's about to be structured. FMCG is a sector that we use every day. In fact, almost all of India uses, and that's why some smart investors also at times comment that okay, penetration, where is the future leg of growth going to come from? EM peers are significantly higher than India. This chart shows that to you very well. We spoke of the penetration versus revenue growth story. So if we take the example of toothpaste or shampoos, they have close to 90% penetration in India. That is, 9 out of 10 people in India or more than that use, say, toothpaste and shampoo. But our per capita consumption as a percentage of EM average, not even like the world average, EM average is at 41 and 18%. So very, very strong and very large headroom for Indian consumption to grow. If I look at the QSR space, which is a very interesting space, Indian spends per capita are very low. For example, this chart shows how Indian food service spends per capita by the urban population, not even the whole of India, was just $10, right? Compare that to the US, that's about $1,400. So very large, 140 times differential, and that's not the differential in our in our overall economy. If I look at the growth, the quick service restaurants have delivered very fast growth in the recent past, in the recent decade, growing at more than 20% CAGR in terms of their revenue growth. So this segment could see very large growth because the structure of the Indian household is changing. We have higher number of nuclear families. We have higher number of women who are employed in the services sector. All of these which are leading to faster growth for the food services segment. If I look at durables, this is clearly a story of under penetration across durables, across white goods. Indian penetration levels are much lower than EMs, and therefore that itself tells you that there's a large headroom for growth. What one must also see is that these have delivered good growth in the past, and therefore have the right kind of caliber to do it as we move forward. Healthcare services in the form of, say, for an example, hospital is something we've discussed. Bed density in India is significantly lower compared to other countries. We are likely to see a proliferation, and there private players could potentially benefit from. In fact, the average revenue per bed is also significantly high, and that suggests that demand is very strong, and therefore we could see high volume growth. So yeah, and digital consumption is something that we have all seen, from low or very low amount of digital consumption. We either have become now digital subscribers, digital buyers, or in a lot of cases there was some buying, but the intensity of buying has increased. I mean, I can vouch for myself for sure. So this confidence of ours in the Indian consumer space does not feel misplaced, because that's something that's just not being said by our investment team and the analysts that we spoke to. It's something that global and Indian domestic leaders are sort of displaying via their actions and by their words. A very large global electronics retailer finally opened its first company-run retail store in India about 15 years after China did. Capacity expansions can be seen across FMCG and other consumer companies. Now, one question that typically always comes is this valuation question. I think this slide makes things very clear. The consumer sector has always traded at a premium and is currently within a good, less than 5-year average sort of a positioning, slightly higher than the 10-year average valuation for the sector. Now, but the question is, why does this sector command that premium, right? And that's visible in this chart and in this text above. Those 4 bullet points. It's clearly in terms of better better balance sheets, better lower requirements for capex, higher return on equities, higher dividend payouts, higher visibility of earnings because of high brand loyalty, etc. Very strong balance sheets, significantly lower leverage than the broader markets, and to an extent they also enjoy lower risk from the global macro slowdown, which potentially could be around the corner, as majority of these companies are focused on the domestic market. So against this backdrop, we're very pleased to introduce the HDFC non-cyclical consumer fund. While there are other consumer focused funds and FMCG funds, this is sort of a differentiated product which focuses on non-cyclical consumer companies and therefore attempts to provide investors the exposure to the growth of the consumption sector, but shielding it from short-term macro volatility in terms of business fundamentals. So in terms of the investment strategy, more than 80% of the portfolio will be invested in equity stocks of the non-cyclical consumer theme. We will have a multi-cap strategy where the scheme would invest across market caps, across segments. The scheme is likely to have a focus on leaders, where we focus on companies which are either leaders or are gaining market shares. And we are equally focused on companies which are likely to witness steady and secular growth, and those which are likely to see some turnaround. This slide is very interesting. It shows how well the diversity is there within this universe. We have about 309 stocks which have market caps more than 500 crore. A good healthy mix within large, mid, and small caps. The overall size of this space is about 20% of India's total market cap. So very diverse, very large, and with a heavy headroom for investments by investors. This slide sort of summarizes, why we think that this universe has fundamentally strong companies. It's because of their high corporate governance. These tend to have relatively stable earnings, higher ROE profiles, higher dividend payout ratios. A very important point in our view, low government intervention. Again, a very important point is high brand loyalty, because it's because of this brand loyalty and investments into brand that these consumer companies potentially have retention with customers. And as the last point says, last couple of points which highlight the relative stability, it's because these are lifestyle related products and therefore are one of the last to go out of your budget. And secondly, it also shields you from the global macro slowdown, if any, because majority of these companies are focused on the domestic market. In terms of historical performance, I think this sector comes out very well. The consumption sector, it's outperformed in terms of rolling returns. It's outperformed the broader Nifty 50 markets in the 3-year and the 5-year horizons. This table on the left. Whereas in terms of volatility, it's largely been better, especially on the longer term, right? So the investment case, in our view, is clearly built from 3 pillars, as I mentioned: consumption theme which is likely to unfold well. We discussed these 5 pointers. Then the stable earnings and ROE profile of these companies and relatively lower risk and volatility in earnings growth. I'll quickly speak on the risks and mitigations. As investors might be aware, this is a thematic, sectoral thematic fund. So therefore, they tend to carry higher risk, and therefore one should have a relatively controlled exposure to such funds. We've discussed some specific risks. Happy to take any questions later if you have any questions around that. That's about it from my side. I'll just quickly try and pull the disclaimer up, but in the meanwhile, I can take questions. Thank you.
Yes, Siddharth, thank you. Customers, if you have any query, you can write it in the questions tab. Or we would be happy to answer them. Please write the queries in the questions tab. We have one question. Whether HDFC has similar ongoing funds in this space?
Sorry.
The question is whether HDFC has similar ongoing funds in this space.
No, so we do not have a consumer or an FMCG fund, and this is our first foray into a consumption focused fund.
Okay. What is CAGR? Could you explain again?
For this sort of space, just a second.
Hello, Siddharth. Am I
Yeah,
audible?
yeah. So,
Yeah.
as you can see on this slide, the longer term outperformance has been visible in this sector. Obviously, we have taken the Nifty India consumption TRI because that's what was fitting as per the extent guidelines. But I mean, nonetheless, this space has delivered better returns. If you see on the left is in the bottom, the left is the CAGR returns of 1, 3, 5, 10-year rolling returns, and on the right hand side, we've shown the point-to-point CAGR that's been seen. So in the recent past, in the past 3 to 5 year, I'm looking at the table on the right. Uh, this one, we have seen that. The consumption space has seen some underperformance, but again, that's also sort of coming back. But more importantly, if I look at this table on the right, on the left, then one can see that in terms of rolling returns, the consumption space does seem to have delivered better returns over the past sort of 15, 16 years, and one could certainly hope that this does show some sort of indication as to the strengths of the sector. Yeah, any further questions?
We have a related question to this. What is the expected CAGR in next 5 to 7 years, or what kind of growth is expected?
Right. So obviously, giving return expectations is something that we cannot do. But in terms of, obviously the holding period, we would recommend to have at least 3 years, 3 to 5 years, in terms of the minimum expected holding period that one should go for with these kind of funds. They obviously carry higher risk than your diversified equity mutual funds. And one certainly hopes that over the medium to long term, they outperform the diversified equity space and deliver better returns to investors. But that's something that obviously cannot be made with a reasonable certainty.
Okay. Which are the other companies in this fund? And is this an active or passive fund?
So the HDFC non-cyclical consumer fund is a active fund. We have about 309 companies within this space, and we will, maybe uh, for around 50, for example, stocks could be chosen, and we will invest across market cap segments, across uh, sectors, but in an actively managed form. Uh, why, in terms of other mutual funds in this space, yes, there are other consumption-focused funds which include, some of these sectors that we've sort of excluded from the theme: auto, realty, power, for example. And there are the very focused FMCG funds that focus only on FMCG. This sort of falls somewhere in between and is a differentiated fund in that sense.
Customers, do we have any other queries? Feel free to ask your queries. Okay, I think we do not have any further questions to this. Siddharth, could you give any closing remark for the same?
Yeah, sure. So HDFC non-cyclical consumer fund is a new fund offering that is being made by HDFC Mutual Fund. The NFO period closes on 7 July. The NFO period opened today, and we are on the first day of the NFO. The fund is obviously present on wherever you deal with HDFC securities from, be it the app, website. In case of any queries, etc., please feel free to reach out to your HDFC securities representative or your HDFC MF nearest branch, or write to us at hello@hdfcfund.com. In terms of investment materials to understand more about this fund, one can refer to the SID that's there on the product page, or look at items such as our presentation, leaflets. We in fact have regional language based leaflets. We have a full Hindi presentation. So a lot of material has been put out by us that could help you, understand this fund better. I'll just quickly display this disclaimer slide. This webinar is obviously not to be recorded by any participant or shared without our explicit permission, and this is the disclaimer.
Subject to market. Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Thank you. Thank you all for joining us today, and wish you all the best for the weekend and have a great time. Thank you.
Thank you, Siddharth. Thank you to the customers for joining the webinar and attending the session. Have a great day.